There are some groups who use Bitcoin who would prefer not to comply with any forthcoming regulations. There are other people, like the Winklevoss twins of Facebook fame, who are actively inviting regulation and seeking permission rather than forgiveness for what they're doing. You argue that that is sort of an irrelevant point, whether or not to invite regulation. Why is that?
Well, I mean, I think it's pretty clear the U.S. government exists. The U.S. government has anti-money laundering laws, anti-terrorism financing laws, and they're going to apply these laws to whatever new payment system comes along. So they're going to do that. What I think the argument a lot of folks make is that, well, look, Bitcoin is decentralized, so you can't regulate it, right? There is no Bitcoin company. There is nobody who owns it or controls it. So you can't regulate Bitcoin. And that's true. And I think regulators need to understand the limits of their power to regulate. But there are going to be Bitcoin businesses that provide services to consumers, whether it's exchanging dollars for Bitcoins or payment processors, et cetera. And these folks are very much going to be subject to the regulations if they are domiciled in the U.S. or doing business in the U.S. And the real threat is that regulators are only going to be focused on the potential nefarious uses of Bitcoin and are going to lose sight of all the benefits and might overreact. And that's going to really dampen these entrepreneurs from starting these businesses. Okay, so
before we get into some of the technical issues related to regulation, what are some of the benefits?
Well, I mean, I would put Bitcoin's benefits really to two categories. One is that it's cheaper and faster. I think that's the reason a lot of entrepreneurs, venture capitalists are really interested in Bitcoins, because it disrupts traditional payments networks. So what does that mean? Well, today if you are a small business, let's say you're a small dry cleaner that opens up, you want to accept credit cards. Number one, you have to ask for permission. You have to apply to different credit card networks for permission to accept their credit cards. When you get that permission, there's a fee associated with that, by the way. If you're a small business, every time you swipe a credit card, it's a 25 cents fee. And in addition to that, 3 to 6% of the transaction. And this adds up very quickly and eats from the bottom line of a small business. With Bitcoin, you can accept on electronic payment, but it's going to be fractions of a penny to process a payment, and there's no permission to be asked. You just join the network. So I think businesses would really be interested in that and can pass along savings to the consumers. You've got remittances. Right, remittances is between a $400 and $500 billion industry, or at least there's that amount being sent from the developed world to the developing world every year. And today, like my mother is from Spain, and she asked me recently to help her send some money back home, and it was 5% of the total amount that she was sending. If you send money to someplace like Somalia or Kenya, it might be 10%. Okay, with Bitcoin, having that same transaction would be, again, fractions of pennies. So I think those are some of the real economic benefits that we would see from Bitcoin.
And you mentioned earlier, before we started recording, you mentioned independence.
Yes.
as Bitcoin allowing people to be more disruptive in other ways than they might otherwise be.
So I think faster and cheaper is sort of the main economic benefit that, again, these entrepreneurs are focused on. Politically, I'm interested in Bitcoin because it really preserves freedom. Bitcoin is a censorship-resistant currency, and it allows people to transact online, person to person, without the government placing a prior restraint on that transaction. And that's a good thing. So let me give you an example. A lot of people, I don't think, realize this, but Glenn Greenwald, who's a reporter for The Guardian, has been reporting on the NSA surveillance. Glenn Greenwald does not collect a salary from The Guardian. He does this in order to maintain his independence. At the end of each year, he puts a blog post up requesting that his readers donate. And this is how he makes his living. When he was at Salon, he did the same thing before that when he was an independent blogger. So today, if you want to give money to Glenn Greenwald, well, you know how he accepts payment? He accepts payment using PayPal and Google Checkout. And those are fantastic services. But they are services that are intermediaries that are subject to U.S. regulation and subject to pressure. When WikiLeaks released the Cablegate documents, PayPal stopped processing donations to WikiLeaks and froze their account, so they did not have access to their money. This was all done extra officially. There was no law that said that Americans couldn't make a legitimate legal donation to a cause who supported WikiLeaks. It was that reportedly it was Senator Lieberman called PayPal and other businesses and said, "You guys are good Americans, right? You're not going to stand for this," and put pressure, extra official pressure on these companies. And so when you have a handful of intermediaries that control Americans' right to give money to whoever they want, it's good to see something come in that disrupts that.
In terms of agencies that are likely to be involved, obviously the Treasury Department and the Federal Reserve would be, and the IRS are likely. What would their involvement be, and what kinds of regulations are officials trying to at least look at?
So at this point, we've only seen, at the federal level anyway, regulation from one agency, and that's the Financial Crimes Enforcement Network, or FinCEN, which is an agency under the Treasury Department. And what they have done is that they've issued guidance, not a regulation, but guidance interpreting their existing regulations in the Bank Secrecy Act, sort of saying any new Bitcoin business has to comply with anti-money laundering laws, know your customer laws, and report. So first of all, identify who their customers are and report any suspicious activities, just like PayPal or Visa or any other company does. The problem with FinCEN's guidance is that it's pretty vague in nature about who has to comply. And if you read it kind of strictly the way it's written, if you're using it for remittances, for example, I mentioned my mother sending a remittance overseas. Technically, if you read the guidance, my mother would qualify for having to register with FinCEN and comply with anti-money laundering. I don't think that's what they meant to do, but that's part of the problem, is that regulators don't understand the technology. So that's mostly the interest of the federal government at this point, is the money laundering, anti-terrorism financing regulations. At the state level is where I think Bitcoin is facing a lot of regulatory pressure. And the issue there is money transmission licensing. If you are a money transmitter, which means you're a company that facilitates transmission of money from one person to another, from one point to another, you have to be licensed. And this often requires a bond, and it requires a long process. So if you are a Bitcoin business, you're a startup, small startup trying to start, if you're starting an online business, you want to be national, you want to be global in scope. Before you can do that on day one, you have to have licenses from 48 states. And that's, takes over a year to do that. You have to travel to 48 different states. You have to hire attorneys, and it can cost you well over $1 million. So for internet startups, that's almost impossible.
What is the difference between a centralized virtual currency, but Bitcoin is a virtual currency, and a decentralized virtual currency?
It's a good question, because when Congress now is looking at this issue, they say they're looking at virtual currencies. That's a big umbrella term, of which Bitcoin sort of is the poster boy. But there's a big difference between centralized and decentralized currencies. Bitcoin is a decentralized currency. As I explained, nobody owns it, nobody controls it. It is a peer-to-peer network of people exchanging money. And by the way, anytime there's a transaction that happens on the Bitcoin network, a record of that transaction is made and is publicly available in perpetuity for anybody to see. That's sort of necessary for the way Bitcoin operates. By contrast, you have centralized virtual currencies, and we've had these for a long time. So if you think about Microsoft Points or Amazon Coins or even airline miles, these are all centralized currencies. A company sets up, creates a currency, Microsoft Points, let's say. You give them money, you get a balance of points or whatever the token is, and then you can spend that. You could even maybe trade it with other people. And so regulators have always been concerned that these currencies can be used for money laundering, for terrorist finance, to move money around under the radar. And they're right to be concerned, because you do have some virtual currencies, like Liberty Reserve is one that was recently shut down by the federal government and its executives indicted. where these are the currency of criminals. They do not require any identification to sign up, and they really don't pay attention to what transactions are happening. And so what ends up happening is when you have hackers selling stolen credit card numbers, or even when you have human trafficking, they will often employ these centralized currencies that are kind of designed to evade money laundering laws, or are kind of designed to facilitate criminal activity. So I think it's important when Congress and regulators look at virtual currencies that they distinguish the ones that are sort of designed for criminal activity from something like Bitcoin, which potentially could be put to use for criminal activity the same way that cash can be.
The only real cost in terms of financial cost to using Bitcoin is the miner fee. That is your contribution back into the network to continue to generate Bitcoins. For a company like MasterCard or Visa or even Google or PayPal, it seems like there may be some interest in urging regulation so that competition from Bitcoin might be more difficult. That is, it would be more difficult for consumers to opt to use Bitcoin. Is there evidence that that is the case?
There's no evidence of that, and I think here's the reason why. I think that credit card companies and companies like PayPal, they don't really see Bitcoin as a threat, because credit card companies, for example, are in the business of lending money. They're in the business of allowing you to spend money you don't have, whereas Bitcoin is cash. You have to have the cash in order to spend it. And the credit card companies are also in the insurance business. If you have a false transaction, somebody charged something to your credit card that wasn't you, or let's say you buy something and when you get it, it's not what you ordered, you can always call a credit card company and have a charge reversed. Doing all that costs money. That's where the credit card fees come in, and that's why using credit cards is more expensive. So Bitcoin does not offer that. When a Bitcoin transaction completes, it is final. It's like cash. Okay, so I'm not sure that Bitcoin really is in competition with credit cards or with something like PayPal, which also offers that insurance. Who I do think Bitcoin is in complete competition with and really would potentially disrupt are money transmitters. So, for example, Western Union, MoneyGram. That all they simply do is transmit cash from point A to point B. Those, I think, are in direct competition. While I have not seen them advocate regulation, the fact is that this regime I talked about, where you have to get licenses from 48 different states before you can operate on day one, well, those companies have those licenses, and they do serve as a barrier to entry for new competitors in that space. And so I'm sure that they would defend any move to preempt that regime.